Looking ahead, Sanlam says it will continue to invest and grow in emerging markets, given what it sees as their vast potential.
I think when we look at our markets and we think of three big buckets being South Africa, the rest of Africa and India, we're really typified by having a great underlying growth dynamic. We've got young populations. That in turn helps to support relatively high rates of growth in each of these markets. And outside of South Africa, we have very low penetration rates for our products as well. So there is plenty of underlying growth. So that good, high-quality, client-centered businesses are going to thrive in our industry in these markets.
While South Africa remains their key market in terms of insurance and building wealth for clients, among other services, Sanlam says it's going to deepen and strengthen its presence in other markets across Africa and Asia. Already, it appears to have struck lucky by partnering with Shriram Finance in India 20 years ago, a country of 1.4 billion people, where GDP has been growing at over 6% per annum for several years, and where they say the potential for further growth is significant.
The true potential of India lies in the less publicized but massive opportunity in rural India, where today approximately 2/3 of the Indian population resides. That's over 900 million people, the equivalent of the entire sub-Saharan Africa population. It is also the fastest growing segment of the market, outpacing that of urban areas. So it presents a unique opportunity for a business that can profitably operate there.
While improved success won't happen overnight, Sanlam says they're encouraged by government policy objectives to improve the regulatory environment as well as the rapid pace of digitization in that country.
There is an ambitious national vision which includes insurance for all by 2047, with policies aimed at promoting digital uptake, advancing financial inclusion, specifically in these rural underserved markets, and promoting foreign investment.
Still with the growth focus in mind, Sanlam Group CEO Paul Hanratty explained the rationale behind the recent deal to hand over Sanlam's active asset management business to leading asset manager 91.
The completion of our transaction with 91 to shift our active asset management and global active asset management to 91 will now enable us to focus on our solutions model in asset management. So Sanlam is going to focus on really what we find to be the sweet spots of asset management: private wealth, multi-management, the passives business, and alts. These have all been high growth businesses for us. And I think the renewed focus on what we're good at as leaders will drive value creation for us.
Sanlam says it puts a lot of stock in the various partnerships it's established in furthering its business, while also citing that its partnership with Time Bank, a joint venture in the extension of personal loans, will go a long way in ensuring it offers holistic services to its existing customers. Nompumelo Losiziba, SABC News, Johannesburg.